Thank you, Jonathan and Anna, for what were comprehensive and detailed presentations, and really just give an indication of the complexity of the trading environment that we're all in now with what's going on. I have to say, I never thought that I would see the day or when I would hear Brexit referred to as a stable and thought through process, Anna. So love the humour, and also Jonathan, that Northern Ireland rules are not as complicated as first thought. So thank you for those. Thank you to those companies who submitted questions initially during the registration process, and we're going to just work our way through those first of all before we get on to some of the questions that have come through the chat function. And we're going to start first and foremost with rules of origin. So question here from Logistics UK: how will rules of origin work for Northern Ireland, and will there be divergence in tariffs between the UK and the EU, and for NI on US tariffs? I'm assuming, Anna, maybe that's probably best going to yourself.
Sure, hope you can hear me okay. So Jonathan kind of covered this already in his presentation of how products are treated for the purpose of exports from Northern Ireland. I mentioned the fact that it's going to be quite difficult to track some of these products moving between EU and Northern Ireland in terms of documentation, given that we do not have a formal import-export procedure. It will be tricky. I won't lie. It will be quite tricky at the moment, as we know. We do not have the differentiation. What's going to happen in the next 90 days is literally anyone's guess at this point. But if there is a differentiation, if we end up with the 10% for the UK and 20% for the EU, it's going to be quite tricky to determine where, when, or provide documentation, maybe less to determine, but to provide documentation to support whether the products manufactured using parts from Ireland, in Northern Ireland, that there's been a kind of substantial transformation of these products.
And just in terms of the substantial transformation and determining origin, can we include, or can companies include intangible inputs to products, things like design time or R&D activities that have led to the development of the product? Is that included in the origin calculation?
So it's not it is for preferential origin to a certain extent when you're looking at value added. For non-preferential origin on the US side, sorry, I'm speaking slowly because you just have to put these things in order in your head first. So for the US side, for non-preferential origin, that does not matter because you have this test of whether the good is transformed into a different product with different characteristics. However, when you look at the calculation for US, non-US content for some of these discounts, so I talked about this, that was for steel and aluminium derivative products, and was also announced for the reciprocal tariffs for the products where at least 20% is of US origin. For those calculations, if you look at the formula and you have the total value of the product and you subtract non-originating, non-preferential, non-originating content from the US content, you look at the final price of the product, and that of course includes intangible stuff like the markup and the additional services. So it is indirectly in those US versus non-US content, but for the actual substantial transformation itself, it is not. And apologies that is complicated, but this is probably the simplest way I can try to explain it.
Thank you. How will the US view an end product with a mix of components manufactured in the UK along with EU purchased components?
Yeah, so this will be this substantial transformation test. And if these components, some of these rulings are so subjective. We had another ruling recently where there was a a type of a boat or ship, and it was sent from one country, and a kind of substantial component was added in another country. But because the initial product had a form of the ship and the final product had a form of a ship, the US Customs decided that it's not substantial transformation. So this will be the same if you have products from different countries. The best kind of way to think about this is whether the products from that you import from different countries, do they have the same kind of type and character as the final product? If they do, it might be tricky to call them UK or EU origin products.
Okay, just moving now to the duty reimbursement scheme. A question here: how quickly does the duty reimbursement scheme refund against not at risk goods? Now, I'm assuming that might be goods that were determined initially that were at risk, but ultimately ended up in the UK and remaining in the UK internal market. And also, will the duty reimbursement scheme be able to accommodate US tariffs? Jonathan, maybe for you. You're on mute, Jonathan, I think, maybe.
Sorry, Peter. Sorry, Anna. Thanks, Peter. Yeah, so HMRC, when I spoke to them on Friday last, they reconfirmed what Stuart Anderson had already indicated, that they are, on average, providing a turnaround of 16 days at the moment on successful duty reimbursement claims for not at risk goods. They are confident that they will be able to maintain that turnaround of just over 2 weeks reimbursement if the EU do start to implement within 90 days time or whatever the counterbalancing tariffs against US products. I would just say, for the caveat that I always put there is these schemes are there. Don't assume that you will make a successful claim, especially with the manufacturing end of it. We went through different scenarios when I spoke with them on Friday, and for larger parts, be that components like chips within a laptop or something like that, where you have serial numbers and barcodes and the ability to identify the whole way through the process, those claims will be easier than for other components where it is harder for you to trace. But yeah, turnaround at the moment, they've indicated 16 days.
Okay. Do tariffs apply to intangible goods such as software licenses? Anna, do you want to maybe take that one?
Yeah, so this is similar to the question we had at the beginning around what is calculated. So the tariffs apply to goods, physical goods, but if you're looking at these calculations, in certain cases you're looking at the final price of the product, then indirectly it may or may not affect.
Thank you. Moving on now to the designation of Irish whiskey, and under a Northern Ireland business or distillery. Where does that sit in terms of the application of US tariffs? And probably just worth addressing, whiskey that it is distilled in Northern Ireland. There will also be those blended whiskies that may bring in whiskey from other parts of Ireland, and also those distilleries that maybe have whiskey sitting in casks that isn't quite ready for the market yet, and have also brought in whiskey from Ireland. So, Jonathan, one for you.
Yeah, I think it's probably more so for Anna, to be honest with you, in the export element of it. The UK origin element of it will come down to, that substantial transformation, the characteristics of the product. Are the products manufactured, processed here in Northern Ireland, or what is actually, what part of that definition of that, defining of that final product happened here in Northern Ireland? the raw materials. Thinking offhand a number of the different local whiskies here, distilled in Northern Ireland. We are UK origin when it comes to how we are defined, when we go out into the export markets. And at the moment, that rate applies the same for the north of the border and the south of the border. If the UK is successful in negotiating this free trade agreement that they are in the process of doing with the US at the moment, how that will work down the line, or if the EU apply these countermeasures and there's different rates because of the 20% reciprocal tariff applying on EU imports into the US. There is obviously risks of circumvention and product being routed via Northern Ireland into the US. But I would be back to the points that Anna mentioned. I think it's more an area that she could provide some clarity on. Sorry, Anna.
No, you're totally spot on. I will just add one point that I missed in my presentation, is that when you're trying to go for UK origin, let's say in this particular example, what helps is if you provide a very good and detailed description of the processing done in the country that's of the origin you're trying to obtain. We had an example with US Customs where a company submitted a request for origin ruling with a brief description of the processing being done in the country where they wanted to get the origin, and that was rejected. They resubmitted it with proper description and detailed description, and it was overruled. So if you're trying to make sure that your product is of UK origin versus EU origin when it comes to when there's a difference in tariffs, make sure you really describe the processing done in the UK, and you provide. Don't assume that US Customs knows how, for example, whiskey is made, but provide that description in detail.
And just whilst we're on the subject of alcohol, I do see a question that comes in through the chat function here from a manufacturer of gin. But whilst the gin is distilled in Northern Ireland, it's sent down to the Republic of Ireland for bottling and labelling. Where would that sit in terms of origin? Is it still a substantial transformation has occurred in Northern Ireland?
So these kind of questions, I can give a high-level answer, but we really need to look at and more than happy to discuss this after the presentation with the companies that have further questions. But it really is so country specific. If you look at the rulings that US Customs, case specific, not country specific. If you look at the rulings that US Customs issues, the tiniest detail, the tiniest difference in processing can determine the kind of preferential and non-preferential origin. In this case, my initial answer would be that it would not be of, if it's sent to the Republic, that it would not be of NI origin. But again, I would need to understand the supply chain, understand the processing, the sequencing of the processing. So apologies, we cannot give, we can, but it's not reliable if we give you an answer based on a very short question. In order to give you a proper answer, we would really need to look at details and understand that better.
Okay, thank you. And a company which is selling hardware into the USA, but could potentially change its business model to a rental or service equipment agreement, would that avoid tariffs?
So the short answer is no. When you move something under rental agreement, it's still an import. It does impact valuation, especially if you send it back and forth. It's a bit time consuming to do the paperwork. I had a client who was importing, exporting goods for lease and repair to the between the UK and the EU, and the valuation component is quite difficult. It will not avoid tariffs. It can, in certain circumstances, lower the valuation, which means lower baseline for duties, but it will not avoid tariffs. Anything that crosses a border is an import unless there was some other meaning to that question. But if you're moving this into the US, whether it's a lease or rental, it's still an import.
Yeah, just not on a US basis, but I've dealt with this recently in terms of product moving from IE into GB, and you know, there was imports, and then there was sales of product, and then there was product that was sent and rented to a company for a period of time. And there's different elements, and Anna will correct me when I'm wrong. There's different elements in terms of temporary export from when it left the Ireland side of it, but when it, in terms of the UK, when it entered the UK, it was an import. The importer then was the company who owned the product, which was the company in Ireland, and then it had implications for them. But I agree with what Anna said. I can't see that being I can't see the temporary admission. In that case, the temporary admission, it was out of their control, because it wasn't them bringing in a product that they were going to use themselves. They had no control of it. It was out on a company side. So be very conscious. And don't mix up. There's temporary admissions and there's temporary exports, and there's different elements, you know, when in the export company and the import country.
A question now on the de minimis threshold, particularly as it relates to Chinese and Hong Kong goods. So when that ends on the 2nd of May, will it apply only directly to goods that are transported from China or Hong Kong, or if those goods that have that China or Hong Kong country of origin, but are shipped from another location, is that a way around it?
That's a very good question. It's an interesting way of thinking about this. This is a borderline tariff avoidance here. So in principle, this would be still of non-preferential Chinese origin if it's just transshipped. And that's what I'm kind of obliged to say as a customs consultant. In reality, however, given how these goods are entered, when they are coming under de minimis, the amount of data you provide is very different. And as I mentioned already, CBP is so overstretched at this point. I would imagine a lot of them will be able to get through, but this is obviously in no way official advice. And the official advice is that if it's Chinese, it is of a Chinese origin, so be careful. But in reality, this is probably what's going to happen. How quickly will CBP be able to respond to that, and how quickly will the de minimis be removed for other countries? That remains to be seen. If they found a way to do this for China, which is the majority of de minimis parcels, probably it won't be long before it's removed for everyone else.
Okay, I mean, I'm assuming in some instances there will be those companies that are buying in bulk from China. It's not intentionally going into their warehouse and being transshipped. It's then split. But yes, I
a lot of it will go through without any problems. Yeah.
Yeah. Does the new US tariff impact goods that were on sea before the tariff was implemented?
So I think both Jonathan and I covered this in our respective presentations. And I mentioned this, that every order has a timeline written in it. So in principle, the high level answer is if it's in the container moving when they are announced and when they go, because not when they're announced, when they go live, it should be excluded. There's usually a grace period in every single executive order, but please check the date. In the executive order, it will tell you goods that were shipped before that particular date and that particular time would be considered not subject to these tariffs, and after that time would be subject to these tariffs, and they are different for every executive order and different tariff.
And I think you probably also answered this next question in your presentation at the very start of it, but what is the current risk of further tariffs being introduced, and how much notice can we expect if implemented?
I mean, we know that they are coming. We already have an investigation for semiconductors and pharma. So
Yeah. Right. Again, this is probably quite a product specific one, but if I source a solar panel from China, where they're all made, and install it into a product from Northern Ireland, what origin is the product for tariff purposes?
sorry, can you repeat that? We source the solar panel, yes?
The solar panel comes from China, but it's installed into a product in Northern Ireland. What is the origin?
Again, totally depends on what that product is, how you install it, what tools you use to install it, how long it takes, what kind of processing you know, it's apologies, this is not us trying to be difficult. It really comes down to the tiniest and tiniest details. So we're not trying not to give you the answer. It's just you know, it's quite risky to give you the answer when we don't know all of the details and the final product and so on. And this really is quite a tricky determination.
For exports into the USA that are normally cleared under Ships Works and Use, SWEU, will there be any change or implication to this process?
Again, sorry, could you repeat the question? Or I don't know if this is for me or Jonathan, but.
Our exports into the USA are normally cleared under Ships Works and Use. Will there be any change or implication to this process?
Again, this is this is within Chapter 98 exemptions, the end use and returned goods, repaired goods, and so on. Some of the tariffs mention them. In principle, yes, they are still excluded. Some of the executive orders mention this. Some of the executive orders do not mention this. Literally, I mentioned this during the presentation, what I do is speak to a customs broker in the US, say, can you use that code still in the system? Does it go through? Does it not go through? Some of the CBP guidance also mention this for some of the tariffs, some of it doesn't, but the high level principle is it should be still exempt under Chapter 98 exemptions of the US tariff. Jonathan, do you want to add something to that?
No, I've had the experience of this, dealing with this in the past. You know, as you talk about that Chapter 98, and we had return goods relief. We had different things in there at the time. You know, bringing tools that were going to be used for work being carried out on a ship and then being brought back. Duplicate lists, all of these different things. It is very, very specific, Anna. You know, you run the risk of not being accepted when they enter the US, and then not being accepted when products come back as well into the UK, and the tariffs attached to it. But as you say, it is very, very specific. And the key is the prep, asking the questions, talking to the customs people, checking before you do it, and ensuring that you have all the paperwork necessary to cover this. And as you said about descriptions, going through the processes, making sure that you provide all the information to legitimately put in, you know, a viable claim against that.
Some questions now on the at-risk goods, Jonathan. Can consumer returns be considered not at risk for faulty goods?
So consumer returns, just getting the context right here. So this is consumer returns coming from, I need the context, if it's coming from the US or if it's coming from the US back into Northern Ireland. Well, in terms of, well, we're talking about commercial movements in the first instance anyway, and the application of rules around commercial movements into Northern Ireland. And if there is trade remedies attached, they are automatically at risk. Movement of goods between the US and the UK in both directions for many years, where they weren't classified as being moved as commercial movements, you know, private individual to private individual, is one of those areas. But in terms of commercial movement where it is properly documented as a commercial movement, I think that you would find that whilst initially it would be declared as at risk, but if it is then a claim being made under duty reimbursement scheme, where you're showing that this is actually a UK origin good being returned from the US because of issues, you may be able to get it back. But it comes down to how it's been classified. Was it a private movement from my aunt in New Jersey to me here in Northern Ireland, or was it seen as a individual or company sending something back to a company here in Northern Ireland? I know when it comes to GBNI movements that B2C, C2B and C2C movements, and that C2B movement where it is a return would never have any customs attachments attached to it, and there will never be customs on C2C movements between GBNI and B2C, where the companies are set up on as economic operators and so forth. But I can't say for I can't say for the US specifically. I would have to look at it. I think you could make a valid claim back under a duty reimbursement scheme if you did have to pay it.
Should you still apply to the UKIM scheme if 95% of your product will move outside of Northern Ireland?
Absolutely. I advise all companies to apply for UKIMs, be that because of the changes that's come up now on the 1st of May around fast parcel movements from GB to NI, which many times will be consumables and things you're bringing in. I would tell companies to apply on the basis that, again, they provide accurate information, that they only want to use their or they will only be able to use their UKIMS authorization for internal movements. They will not be able to declare, if you do not know at the point of import the final destination or where you're going to sell 100% of your product or make available for sale products, you cannot declare that as not at risk under UKIMS. But UKIMS authorization for internal purchases, be that vehicles and or consumables or machinery or anything like that, you will require UKIMS authorization to have it. But if you do not know, it doesn't matter if it's 99% remains within the UK internal market and 1% has been sold out of it. Your goods are deemed at risk because it does not meet that criteria that you know where 100% of the product is going at the time of import. You can't split it and look at it that way, and we can look at things like that, but definitely look at it for internal use.
Okay, I'm very conscious of time here, so I'm just going to ask one more question, and then I will wrap up. In terms of imports coming into Northern Ireland, how are US tariffs applied to goods entering Northern Ireland ports, and specifically under which jurisdiction, UK or EU, are these goods classified for tariff purposes?
Okay, so that's back to myself, Peter. And you know what? It's an area where I feel confident, thankfully, in answering. So, as I said, for anybody to be able to declare goods is not at risk, they must have the prerequisite on import of being UKIMS authorized. You do not need to be UKIMS authorized to avail of the duty reimbursement scheme if you can provide evidence thereafter, but to be able to declare the goods as not at risk on import. If they're coming from the rest of the world into Northern Ireland directly, if your company is is UKIMS authorized, there is no counterbalance, rebalancing tariffs, trade remedies attached by the European Union. There's just the standard tariff applied by both the UK and EU. If the difference between the UK and the EU tariff is less than 3%, the UK tariff, global tariff schedule will apply. If you are not UKIMS authorized, or if there is trade remedies attached and those goods are automatically deemed at risk of entering the European Union, EU tariffs will apply. So you're going to the Northern Ireland tariff schedule which is a standalone within the hmrc.gov.uk website, and it will have the European Union applicable tariffs for those items listed on that, and those will be applied, and then you have the choice of either paying it or waiving it. And if you pay it, if you can then provide evidence of the final destination of a percentage of that product, you know, if you sold 50% within the United Kingdom, you sold 30% into the rest of the world, you can then look at making a claim back through the duty reimbursement scheme for those elements that did not enter the European Union. So that risk, not at risk, prerequisite UKIMS. If it's 95%, anybody who's applied for UKIMS, you tick 9 declarations, 9 or 10 declarations at the end of it, that you will not use your authorization unless it is valid to do so. When you get your letter of authorization, it states very clearly when you can and when you can't use it. It is a trusted trader scheme. You're self-certifying. I've been told many times by people, HMRC say my goods are not at risk. No, they don't. You do. You've told them that they're not at risk. Your letter of UKIMS authorization, if your goods are at risk, if you have a compliance review and it's found that your goods were at risk, they will apply European tariffs on those goods.
Okay, thank you. Listen, first of all, thanks to our speakers today, Anna and Jonathan, for those presentations and also the difficult questions posed at the end. From an Invest NI perspective, you know, we will be pushing information out through the NI Business Info website as frequently as we can, and as soon as it changes and becomes available, it will be our main channel for comms on US tariffs. This webinar, as you know, has been recorded and it will be uploaded. That's actually going to be on our own website at the latest mid next week, if not before. The NI Business Info website also does have a tariff checker on it, which you can use to determine the tariffs on your goods for over 160 companies. And in fact, if you hadn't have enough today on US tariffs and the implications, there's a number of other events being run by the UK Export Academy, which are also on, you can get the link on the NI Business Info website. As our speakers have alluded to today, there is a pause on the EU countermeasures, but please do use that time to look at your supply chains and see if there's any alterations that you may be able to make, which might ease the burden of the current tariff environment. And on that note, our supply chain team in Invest NI have a couple of workshops planned between now and September this year, really looking at the resilience of supply chain, so maybe worth having a look at. And finally, do talk to your Invest NI client executive or trade advisor and feed through the issues that you're facing. We may not have all the answers, but we do sit on a tariff working group that the DFE minister has recently convened, so we can at least feed those issues through and ensure that they're ultimately fed through to the UK government and counterparts elsewhere. So thank you very much to everybody for joining, and I wish you well as you navigate this environment. Thank you.
Thank you.